Most traders spend thousands of dollars on prop firm evaluations and still never see a single payout. I've made over $300,000 in verified prop firm payouts from prop firms, and I'm going to show you how you can quite literally go from $0 in your bank account to 10K a month. Specifically, your first 10K withdrawals step by step, no bullshit. But what I'm going to do is I'm going to show you the actual mathematics behind every single decision. This isn't just some random video, low IQ video. This is a real blueprint. I'm going to show you how to utilize these futures trading retail prop firms to quite literally, again, go from $0 to your first 10K a month. We're going to be talking about firms like Top Step, My Funded Futures, Take Profit Trader, Apex, Lucid, Tradeify. These are all these staple prop firms in the whole day trading industry. But you're probably asking yourself, what even is a prop firm? I don't even know what a prop firm is. Maybe you're new to day trading, maybe you're a beginner, and I'm here to explain everything to you for completely free, no BS, like I'm your big brother. So if you're new, grab a seat, make sure to like the video, and let's get started. A prop firm gives you access to a funded trading account in exchange for passing an evaluation. You're not risking your own capital to trade, you're risking the firm's capital or the company's capital in this case. But what you're risking is usually a one-time fee, anywhere from $50 to $300, which is the evaluation fee of the of the company. But here's what people don't understand about the whole business model, right? For the firm to be able to, let you make all this money, 10K a month, 20K a month, 10, 20K in one payout, they have to make money themselves. So what people don't realize is that there's 3 different revenue streams from a prop firm. Number 1, we have evaluation fees. So essentially, all the people who are trying to take a challenge, who want this opportunity to get this funded account and then make money on the funded account, they're paying all these evaluation fees. And the reality is most traders fail. Okay, so the failure rate is like 95% for day traders and traders embarking in this business model. And all these funds, since most traders fail, fund all these payouts, right? Like this. The fees from the failed evaluations fund the successful traders. The next way they make money is going to be a profit split. So when you request a payout, they usually take around 10 to 20% of the amount you request, and they keep that for themselves. The successful traders, like I said, give around 10 to 20% of the gains they make on their funded account or payout cycle, payout request. And people say that it's not real money, it's just kind of built into the model as like a marketing gimmick. So they make you think that you're really trading because it's all simulated, but who really knows, right? The third way they make money, all right, is going to be from people resetting their accounts as well as the monthly subscriptions. So going back to these evaluation fees, right? If you didn't know, the way the model works is that you pay this evaluation fee, right, for your first account, up front, right? But then they bill you every 30 days until you've passed the accounts, right? Now, if you haven't passed the account by the 30 days, but let's say like you're in profit, of your profit target to pass the account, well, you keep the progress on the account, but they still bill you, right? Now, if you're negative or you've blown the account, they give you a free reset once that 30 days ends. But all the people who are doing these resets and getting these subscriptions, they're making all this revenue and all this money from those traders who are also doing that. Now, there's a couple other ways they also do make their revenue. I don't want to get into it too much because it's kind of out of the scope. I'm just trying to explain to you guys, who are full beginners and new to day trading, new to stock trading, options trading, futures trading, just this, this world of retail proprietary trading and this whole business model of, just proprietary trading, right? But why does this matter? Because once you understand the game, the reality, the rules of this whole business model, you basically realize that you need to essentially be in the top 5 to 10% to actually make money with these firms, these companies, right? The game is not about being the majority of day traders who fail. The game is about being the top 5% of day traders who win. And understand something, guys, that is not a luck problem. That is a math problem. You need an actual edge, an actual methodology that over time you can make real money with. This isn't luck, right? This is not gambling. This is a real skill and a real process that with actual understanding of how this works, having the right guidance, having the right information, you can master, right? And that's why you're here. That's why, you're messing with your boy AA Bands, because I'm the best in the game. All right, so I have a illustration here for you guys that I kind of want to recap, what we just talked about of how money flows through a prop firm, so you kind of have like a direct understanding of how this whole process works. Okay, excuse me, oh my god, I just had some crazy banana pudding. Shit was too good. Okay, so the way it works is that you, right, as a trader, you're paying the evaluation fee. So we're going to be using a Top Step 150K account in this example. And again, for you guys who are intermediate or advanced, you might already know all this information, but please bear with me. This is for the beginners and to really solidify your understanding and knowledge of how these things work. Okay, so you pay $149, the evaluation fee, to Top Step, right? Right here. All right. Top Step is also getting all of these evaluation fees from all the other people. All right. So the 85 to 90% of people that, take this evaluation and pay this fee, they're failing. Okay. 85 to 90% of these people are failing. All right. And then of the people who buy this evaluation, 10 to 15% pass that evaluation. All right. And then those people get a 150K funded account. And then the buying power of the 150K funded account, which means that their balance starts at 0. So if you guys have ever, passed an account, maybe you guys know how it works. It starts at 0, right? So when you trade profitably, you basically get 100% of your first 10K, then 90%. All right. So essentially, your first 10K, payout that you get, you're gonna get 100% of that, and that payout goes to your bank account. Now, the reality is that this is just part of the payment structure that they give you. But after you make that 10K, they take 90%. Right? And that's going to be the profit split. The firm's cut is going to be 10% after the 10K. And then that's going to, be plus the failed evals that, they made. And then this funds more and more valuations and then more and more, overall prop firm operations, right? So to understand something, guys, the prop firm, they want you to succeed, right? Because then they're going to profit from, your profits. If, maybe if you're on sim funded or even a live account, if they, claim that it's true profits, right? They're maybe copying your accounts on the sim funded stage. Who knows, right? But they also profit when you fail, right? But your whole job in this whole gamification, this whole idea, right, is to be in the top 10 to 15%. Because if you can be in this route of passing and then obviously consistently making money, well, you can stay funded long enough to then compound your money into more accounts and then keep getting more and more bigger payouts with other firms and just keep scaling up. But you're probably asking why, I'm coming from Forex, or maybe I'm coming from options, why futures firms specifically? And I'm going to actually talk about that because a lot of people in my TikToks and a lot of my videos, they're coming from Forex and CFDs, or they just think they just, they have the idea of Forex in their head. They don't even know what futures is, or they think futures is a scam. So I made another illustration kind of showing to you prop firms versus the CFD prop firms. Now, CFD stands for contract for difference. It's just the actual way, the professional way of saying Forex, but you need to know the difference. In the United States, you cannot trade on a CFD broker and you cannot trade, really with CFD firms. Now, there are some loopholes that other big CFD firms have kind of given US traders to do or use, like FTMO and whatnot. There are some loopholes. We'll kind of get into that. But in reality, right, it goes kind of like a layer deeper. There's a reason you don't want to trade CFD firms, and we're going to cover that. When you're trading on a futures prop firm, you're trading on an exchange. Okay, this is called the CME, the Chicago Mercantile Exchange. The reason this is so important is because all the orders are centralized in one singular place, and it is regulated. Okay, this is regulated by real institutions, real governmental institutions. So you can't, they can't, even these institutions, these hedge funds and other people, they can't scam or manipulate price, manipulate quotes, and just do bad trading practices. But on a CFD broker, they can do that. The price feed is real on a futures broker, while it's synthetic and derived from the brokers. So again, when a broker acts as a counterparty, it's essentially called a B book. So you're not actually putting trades in the live market. They're just internalizing that risk, not sending your orders to the live market, and then because they know you're going to lose, and they just trade the opposite of you essentially, or just internalize that risk. In a futures prop firm, there's real liquidity and real depth in the order book because again, it's a real exchange. There's a bunch of other people who are actively trading the market in real time. But on a CFD broker, because there's so many CFD brokers and all of the brokers act as counterparties, there's no real order book, right? Now, regulation wise, again, it's regulated by the CFTC, all right, or the NFA. But this is, and actually the NFA as well in the US, but the main one is the CFTC. You've probably heard them. They really enforce proper trading practices, and they don't let scams kind of run rampant, right? And then on CFD firms, though, this varies by location, this varies by country. I'm sure you've probably heard of people going on offshore brokers and depositing money in offshore brokers because on the offshore islands, the whole legal structure is completely different. So they can essentially offer US clients fake offshore brokers that, you know, can manipulate quotes, can manipulate spreads, and they're legally allowed to do that because the jurisdiction is offshore. So you really want to stay away from CFDs, especially on a broker. When you're trading these different instruments, you're trading things like NQ, ES, you know, GCCL. This is, you know, Nasdaq, the, you know, ES, S&P 500, gold, oil, right? And then on CFDs, you're trading actual forex pairs. So you're trading like the euro versus the dollar, the yen versus, you know, the pound, or excuse me, the pound versus the yen, or you know, the dollar versus the yen, right? And excuse me, you can also trade, you know, synthetic indices and synthetic crypto CFDs, but again, there's no real order book, so this is all kind of just like fake. Like, no one really trades this. Now, I will say there is one benefit to be trading forex or trading on a CFD broker, which is essentially you can basically hedge, which means that you can be in a buy position and a sell position at the same time. You can't do that on a futures because it's against the CME regulations. You can do it on different accounts, but what I'm saying though is on a CFD broker, you can do it on the same account. All right. And then on the fills, right? The exchange is essentially matching your fills. There's something called a matching algorithm, a matching engine that will match your order to like an opposing party through the CME. Right. And then on the CFDs, it's essentially broker filled. Yeah, there's not really, there's a conflict of interest essentially. But, you know, from all of this, right, the main thing is like, the skills transfer to a personal account. You can't actually make a personal account on a CFD broker because it's not allowed in the US. So if you're going to trade CFDs, there are other brokers like, you know, Oando, Forex.com that are regulated, but you can't actually get the leverage that you want, and you can't trade things like gold, Nasdaq, which are very, very popular instruments. And, you know, the top firms are going to be Top Step, Apex, My Funded Futures, and then for CFDs it's going to be FTMO, Funded Next, and, you know, the 5%ers, but no one really gives a fuck about the 5%ers. You know, FTMO is the main one. In reality, the reason you want to trade futures though is because of execution, and it's a real exchange, and all the quotes are centralized. You know, when you see, you know, gold is at 45.50, right? The hedge fund and other institution also sees gold is at 45.50 at the same time, right? That's what matters. All right, so what I want to do is I want to walk you through like a real life and real practical example of how you would be using these funded accounts and how they kind of work. As you probably know, Top Step is the #1 firm in the industry. They've been here in the, you know, for the longest time, and they have 3 account types. They have the 50K accounts, the 100K accounts, and the 150K accounts, right? And you know, based off the account type, they cost a certain amount of money. So like I said, we're going to be using 150K account size as an example, but I want to show you the evaluation for the funded account. All right. So just for preference, or just to recap, the evaluation accounts are called the trading combine. It's just a fancy way of calling an evaluation account an evaluation account. And then the express funded, it's called XFA, is called the funded account. To get the funded account, you have to pass the trading combine, and then you get the express funded account. You're only paying $149 a month. That's your risk. That's your upfront cost. And here's how it works on a 150K account. So like I said, these firms just aren't going to be giving you money for free. That's just not how it works, right? Like if everybody could just, you know, take these challenges and, you know, just instantly make money, and they give you the opportunity just to make $1 or whatever, and then give you $20,000. Like that's not how it works, right? There's rules in place, obviously, which means that clearly that you have to have some skill to pass these accounts, right? So in this case, when they give you this 150K simulated account, you have to make a profit target of 9%, or excuse me, of $9,000. So what I want to do is I want to show you guys that this $9,000 target, it's obviously a monetary amount of $9,000, right? But you don't actually have, you know, a proportional amount of drawdown to work with. So the trailing drawdown, this is called trailing drawdown, is how much you can lose before you've lost the challenge, and before you forfeited that money and you've essentially lost the account. This drawdown amount on a 150K account is $4,500. So what this means is that at any point until you make $9,000, you cannot lose $4,500. Now, here's how it works though, right? People think that, oh, like that's fucking hard, right? Having to make $9,000 without losing $4,500 at any given time, like that's freaking hard. But what happens is they know this, right? And obviously the firm is here for the traders. It's not here to, like, you know, screw you over. It's here to give you an opportunity if you actually have the skill set, right? And what happens is essentially when you make the first $4,500, right? When you make the first $4,500, also I can't fucking draw, like this is ass, the drawdown locks. Okay, what this means is that as as you're making money, right, that level, that breach level keeps scaling up. And I have a really good visual that I'm going to show you guys later, but it keeps scaling up and it keeps following your equity curve, your amount that you make. Once that amount hits $4,500, then it locks, it doesn't trail more. So let's say you have, let's say once you make $4,500 now, you're at, $8,000. So you make another like $3,500, you're at $8,000. Well, your drawdown is not $4,500, it's $8,000. So you have way more room now. So the whole incentive is you trade responsibly, you make this buffer, it's called the buffer, and once the buffer is made, you can keep trading however you want, keep scaling and compounding, and then you can keep either withdrawing to your buffer or just keep scaling up, normally. Now, I will say, I don't want you to look at, these numbers from a dollar amount. I want you to look at these numbers from a percentage amount. $9,000 of 150,000 is what? 6%, okay? And then $4,500 of $150,000 is 3%, right? So essentially, you have to make 6% without losing 3%. And based off this, you'll know how to size in the most proportional and optimized way to pass these accounts. Now, I can tell you personally, for me, I only risk about 0.25% of my account balance, which is $375 on these 150K accounts, right? Now, however, how you want to, risk on these firms and these accounts is really up to you, but that's how I kind of do it because it gives me the most longevity in a low risk averse means to then scale up responsibly and, have enough ample breathing room and drawdown. Some other rules on the trading combine is that you don't have max contracts, right? You can actually trade up to 15 mini contracts, fully, you have no restrictions, but you do have that restriction on the express funded accounts. And there's really no minimum trading days. I don't know if they've updated that on the combines. Oh, actually, they have, because there's something called a consistency rule. So, we'll get into that, but a consistency rule means that you just can't make more than 50% of the profit target in one day. So all that's saying is that of this $9,000, you can't make more than $4,500 in one day. So the minimum, you have to pass is essentially 2 trading days. And there is no time limit, but remember, you have the billing cycle. So based on when you buy the combine, when you start the challenge, 30 days from that date, you are going to get billed the same amount of money. So there is no time limit, right? Because if you're in profit during that time, like I told you, well, what's going to happen is that you'll keep your progress, but they're going to just charge you again. And again, your whole goal is to just hit that profit target without breaching that drawdown. Now, once you've, passed all of this, and I'm just going to delete this all for all you guys really quickly. Once you passed all of this, now, you've made 6%. Congratulations, you've passed your evaluation, and now you're on the express funded account. So once you get that account, right, people think that, oh, like I'm going to get $150,000 now. Like I can just make whatever amount of money I can blow, whatever. No, that is not the case, okay? Your starting balance on the account is $0. What this means is that you still have your trailing drawdown of $4,500, but it's going to show as $0 in your balance as your starting balance because that's kind of like your starting point, right, of your account. The max loss is going to be $4,500 from the starts of your account, and then once you've made that $4,500 in the trailing drawdown, it locks, and then whatever that balance you have now is going to be your drawdown. So once you make $4,500, and let's say you make it like another $2,000, you're at $6,500, well, your drawdown is going to be $6,500 because it locks at your balance, which is going to be $0 once you've made $4,500. So the way the profit split works is that for every 10K you make, well, for the first 10K you make, you get 100% of that. So again, the whole point of this video is making your first 10K off prop firms, right? So essentially, you want to first, aim for your 10K payout, especially for a beginner. I tell my students and tell people who are looking to get into prop firms not to like go for a home run or, do anything crazy, but just focus on getting that first 10K first. And once you do that, well, congratulations, you made your first 10K and you get the 100% of it, right? But then after that, you have a 90-10 split. So every, $1,000 or whatever amount of money you make, you're just getting 90% of that, essentially, right? So the max payout on Top Step is $5,000, right? So it's $5,000 on Top Step. So, right? So tell me, I want you to actually, comment down below, right? So I know you're watching the video. If you can have 5 accounts on Top Step, 5, 150K accounts, and the max payout is $5,000 per account, what is the amount of money that is going to hit your bank account after you request $5,000 for, for every account up to 5 accounts? So $5,000 through 5 accounts. Somebody in the chat tell me. All right, so now once you, make that money, congratulations, you got your payout, but you still have to, so remember, there are still rules on your payouts, right? You still need minimum winning days, and you still have a minimum profit threshold, basically, which is kind of based off the amount of money you make. So here are the rules, essentially, very simply put. You need 5 winning days of $150, okay? Once you have 5 winning days of $150 or more, what happens is then you're eligible to request a payout, right? Now, the money that you can request has to be the money that you generate and the money that you make, okay? So it's not like you can just, you get 5 winning days, of $100 and or $150, and then you just request a random payout of money you haven't made, right? You still need money in your account. And what TopStep allows you to do is they allow you to request up to 50% of your balance per payout request once you've met the threshold of 5 minimum winning trading days. So let me give you an example, right? Let's say you have the 5 winning days, all right? It's great. You have the 5 winning days, and then you have a $2,000 balance in your account, okay? $2,000 balance. What this means is if you want to request a payout, you can request up to $1,000 per account. So let's say you have 5 accounts and, you are $2,000 in every single 5 account, right? That's what? $10,000 through all of your accounts, right? Now, if you want to request that payout, if we're requesting $1,000, or you're able to request $1,000 per account now, right? That's the max. Well, guess how much you're making then? You're essentially requesting a $5,000 payout, right? But remember, they take 90% if you haven't already made 10K. So you're essentially making $4,500 on that amount if you've already made 10K, right? But if you haven't, then you're going to get that first $5,000, straight to your bank. But that's how it works, right? And then your trailing drawdown is going to, trail until it locks at break even. Just have the visual here. And your whole goal, right? Like what's the whole goal of this, guys? Okay? The whole goal is you're not supposed to be going for home runs, guys, okay? All these trading gurus, all these people are just lying to you. I've been doing this for damn near 5 years now. I've literally dedicated my life towards this. Your whole goal is to let time play out and you compound your money, okay? You scale your account, you compound your contracts, and you're just consistent with it, right? Because the name of the game is consistency, right? It doesn't matter if you make 10K in one day when you can just lose that the next day, right? So focus on risk management, having a trade limit on the day, staying funded, and then compounding your withdrawals consistently until they move you to a live account. Now, I want you to trust me on this, guys, okay? Don't compare yourself again to all these other influencers, because if you try to hit home runs and you try to replicate these results and you listen to these influencers who lie to you, you're gonna just fail, just burn and crash, and you're not gonna be able to get your payout, okay? This whole goal is to get you your first $10,000 from purely day trading in the fastest way possible. And again, we're not going for a max payout. So obviously, once you go for your 150K accounts, which I recommend no one trades less than 150K account, okay? Well, to request a 10K payout, what do you have to have? Right? All you got to do is, if you want to request let's say, is make a $4,000 balance. Why? Because by making a $4,000 balance, you'll have enough for 2K per request. And then if this is your first ever 10K, you can withdraw 2K per account. You have 5 accounts, and boom, that's your first 10K. Now, I will say though, don't get it confused, right? I'll take it back 1 second, okay? So once you make that $4,500, your trailing drawdown locks, right? I told you this, but what people don't realize is that you can still meet the requirements to request a payout before you've made that buffer. But what happens is if you request that payout, you are essentially eating into your buffer. So let's say you make that $2,000, going back to this analogy over here in this example, let's say you make that $2,000 as a balance in your account. You request that $1,000 payout because you just wanted to pay out through 5 accounts. You make $5,000 as a payout. Now your balance is $1,000, right? Since you haven't already made $4,500 first, you're eating into your drawdown. So instead of having $4,500 now till you blow your account, your new breach level is going to be completely different. Your new breach level is going to be $2,500 from your highest watermark. So you're essentially losing $2,000 worth of drawdown, which is essentially basically half of your drawdown, so you blow your account. And do you want to do that? Really up to you to decide. I can't tell you, but what I can tell you is making that buffer is always 100% the best idea if you were confident in yourself and you want to scale your accounts, right? I only suggest you request a payout if you really need that money and it's still like a decent amount, like 10, 15K, and you're just like, fuck it, I just want to pay out, and then you're still confident that you can still do another cycle of accounts, or you can still make money on the accounts despite not having the full drawdown. But obviously, making that full amount, making that $4,500 first is super critical to make that buffer. All right, so now that we've kind of covered all the prop firms and how you can go from 0 to 10K a month in the fastest way, right? The whole kind of breakdown of how this works, we're gonna be covering how trailing drawdown works, because obviously this is the most important thing I'd let's say, of everything that we've talked about, like knowing how to do this. So, you know, for you guys who just can't understand what I'm saying verbally, we're gonna break it down visually. So as you guys know, drawdown is the #1 reason why traders blow their account, because they have no clue on how the drawdown actually works, the math behind the drawdown. It's not necessarily that they have bad trades, but they're just misunderstanding the rules and the idea of longevity, so they don't know how to size their trades because they don't understand drawdown. There's two types of drawdown: trailing drawdown and static drawdown. Okay, I need you to understand both definitions just for the sake of this video. Even though firms don't have static drawdown, every single firm, futures firm, has trailing drawdown. And if you guys have ever traded with Apex Trader Funding, they used to have intraday trailing drawdown, which would trail from your highest watermark, but they don't have that anymore. It's end of day. But regardless, you still need to know these definitions and, you know, end of day and whatnot. But yeah, trailing drawdown follows your highest balance. As you can see, if we have a $4,500 trailing drawdown limit, as we have with Top Step, what this means is if you start your account over here, right over here, and you start making money on your account, you keep going up and up and up, well, that limit, that $4,500 limit, will also trail based off the new balance that you have, because it always stays at $4,500. In this example, we have the peak right here, the peak of $1,667, and you can see that if it's always $4,500, right, your floor, your drawdown floor, is going to move up to minus $2,833. So essentially, if you go to minus $2,833, once you've hit $1,667, you've blown your account. You will always have $4,500 of room always. For static drawdown, this means like your floor always stays fixed at the start. Okay, so for example, if you start over here and you end up making a shit ton of money, whatever, this is not gonna trail up from that highest amount. It's gonna just stay at this point down here. Let me see if I can show that a little bit better. Yeah, it's just gonna stay at that point down here like this. You can see in this example as well, which means you have all of this drawdown, $6,167 of room to work with to scale your account and make money. Right now, the beauty of prop firm trading, the beauty of especially Top Step and end of day drawdown firms, is essentially it combines both of these and you have the best of both worlds essentially at a certain point. Now, Top Step obviously can't offer the static drawdown right at the start because they're a business, right? They're not going to be able to make money and, offer their services if they just gave everyone all of this room to work with. So what they do is they have a trailing drawdown, end of day trailing drawdown that works to a limit. Like I told you guys, once you've made that $4,500, then the drawdown becomes essentially static. So let me see if I can make another example for you here really quickly to kind of illustrate this, right? Like let's say, right, you have your equity, or excuse me, your God, I can't even fucking speak today, your trading account, and it ends up growing like this. And let's say that this is your $4,500 mark, right? Right here is when you've made $4,500 like that. Okay. What this means is, as your drawdown, once it hits this point, it stays like this, so it doesn't increase further. So now if you keep making more and more and more money, right, it just keeps staying at the same level once you've made that $4,500 first in the first place. But up until then, you can see that this whole range is always going to be $4,500, right? The spacing between here and here, if you draw this out, up until here is always $4,500, right? I just, I gave you kind of like a rudimentary example on how this works. So what this means is that you're incentivized to actually risk more and scale your risk once you keep making more and more and more profits. So this essentially benefits you and rewards you to hit bigger and bigger numbers and scale up even harder and harder if you trade responsibly and you make this buffer, and then you scale up, normally of just, by having confidence in your trading system. Now, on a personal account, this is why I say always invest in a personal account when you can. You have always static drawdown, because on a personal account, you have no limitations. There's no rules. You can blow your money. You can do whatever you want. So on a personal account, you can just compound and compound and compound your profits and just keep going up and up and up, because you have a static drawdown. There's no rules, there's no limitations, because it's your own money, it's your own account. You can do whatever you want with it. So now you've understood how a Top Step evaluation, a combine works, how the express funding account works, and how the dynamics work, the drawdown dynamics, the risk dynamics, and the cost dynamics, as well as the whole example of, again, just the drawdown dynamics, right, of how everything works. All right, great. So let's actually talk about now how we can get that money into your account, how you can get that first 10K into your account, into your bank account, using prop firms from day trading. What we're looking at is essentially a strategy that has different win rates. So if you have a 35% win rate of 40, 45, etc., you're basically getting a chance to see how fast and how long it would take you to make $10,000. Let's say you go for a 3-to-1 R. All right, you're taking 2 trades a day, 40 trades a month. Well, you can see that as you have a higher win rate, the probability that you hit your first 10K is going to be way, way, way more. But obviously, I can't tell you what system to have, what strategy to have. You have to figure that out on your own. But we'll actually cover at the end how I can help you and how you can actually learn how to do this in the fastest way possible for yourself. I would say realistically, right, through my experience, having that 45 to 55% win rate in that range is going to be your sweet spot to be able to get your 10K, your first 10K in the fastest way possible. Based on how these prop firms work and kind of the rules, it's kind of out of the scope of this video, but essentially you don't really want too low win rates because you can have pretty big, massive losing streaks, massive drawdown streaks, and it's not really conducive to, getting payouts on prop firms because they're kind of designed for more scalping, 1-to-1s, etc. But again, this is just assuming you're able to kind of devise a system with a 3-to-1 RR at a 25% win rate minimum, 35% win rate minimum, and how as you increase your win rate with that system, how fast you can make that first 10K. You can see here, I've also given you some simulated equity curves over 6 months using the same strategy with different win rates, showing you that, as you have a higher and higher and higher win rate, well, obviously you make more and more and more money. And the lower win rate you have, you can see they kind of have about, bigger drawdown streaks. Even though they make money, they have bigger drawdown streaks. So you want to sit around that like 50 to 55, 45, 50, 55% win rate if you're going to go for like a 1-to-3 R. Now, if you're going to go for like a 1-to-1 or a 1-to-2, this is going to change the whole dynamic. I'm just trying to give you an example, right? If you can increase your win rate, figure out means of increasing your win rate, that is quite literally saving you months of time to get to your first 10K, which means that your edge, your strategy, the way you make money and understand the markets and having the right information is the number one critical deciding factor if you're able to do this. Because what's the whole issue, right? I've been doing this for 5 years. I can tell you right now that retail day traders, they have no clue what they're doing. They think they do, but they have actually no clue, right? They're watching people who aren't giving them the right information, who aren't giving breakdowns how I'm giving you, and they don't know how to create a strategy, and they don't know the right concepts to create a strategy with, whether that be ICT, order flow, smart money concepts, whatever. They still don't understand it, and they don't have the right guidance. But remember, guys, this is just with one account. Okay, this is only for essentially just trading one account. The whole story just flips completely when you're scaling with multiple accounts and using a multi-account strategy, which we're going to cover. And guys, so far, if you've enjoyed the video, please drop a like. It really takes me a long time to make these videos, and I'm glad that you guys are learning. I'm here to give you guys information, but all it takes is 2 seconds to like the video and show your support, guys. But let's continue. You're not limited to one account, right? You can trade multiple funded accounts simultaneously. If you have 3 funded accounts, each, 150K, right? Like I said, we're just using one account as an example, right? Each making, $500 a week. That's literally 1.5K a week, bro. Or $6,000 a month. You can have accounts at multiple different firms: Top Step, Apex, My Funded Futures, Lucid, Take Profit Trader. And, I covered all of the main futures firms that you should be using and looking into and, scaling with, right? If you go to Top Step, Apex, My Funded Futures, Lucid, Take Profit, TradeFi, all these different firms, right? You're going to be able to make goddamn, 100K, 200K a month, right? I'm actually getting to this point pretty soon. All this capital, that's almost $5 million, $6 million in funding. And you guys know I run 5 Top Step 150K accounts currently, and that's how I make my money, right? That's how you scale from 10 to 30 to 50 to 100K, and eventually you have enough money for your own personal account, and then you don't actually have to utilize and rely on prop firms anymore. So I have 3 phases here, kind of to show you from how you can go from one account to actual real financial independence over the over 12 months, right? This is literally starting from one account, assuming you're profitable. Remember, this is assuming you have a strategy that can make money, you can consistently do this, and you've analyzed the drawdown metric, etc., and you're able to get to that point, right? So number 1, prove it to yourself, right? One funded account, 150K, you're risking 150 to 225. Let's say, actually let's do 375, so 0.25%. And you go for, $500 a week. It's around $2,000 a month. So a month like 1 to 3, you're making 2K a month. Now let's say you have 3 funded accounts across, 1 to 2 firms. Now, obviously you can have 5 accounts on Top Step, but I'm just trying to give an analogy here and trying to show you an example. You have the same strategy, the same risks, but you have triple the output now because you have double the accounts, or well, 3x the accounts, right? If you have 1 account. So from months 3 to 6, you're making 6K a month. And on phase 3 is where you reach true independence, of where you use your payouts to fund your personal account and you have no prop firm rules and no drawdown limits. And you can kind of see over here, if you have 1 account, how much you can essentially make per month over a year. And if you have multiple accounts, how much you can make, per month over, the span of a year. It just keeps growing and growing and growing, right? You have the same strategy, same edge, the same risk per trade, but the only difference now is how many accounts you can run. And if you guys want, I can make a video on that, and in that video on how you guys can do that. It's going to be a lot of work, but if this video, let's say, gets 5,000 views and, you know, let's say 200 likes, I'll make it for you guys. Now it gets a little bit more complex because you are gonna get moved to live. There are payout caps, etc., through firms, through accounts. But once you're moved to a live account, you know, the same analogy still applies, right? You know, you can easily, even on a live account, a live funded account with Top Step or My Funded Futures, all these other firms, you can easily still make 5 to 10K a month, you know, on these live accounts. But realistically, if you're risking low, right, and you're going for that first 10K, it's gonna take you, you know, 1 to 4 months, most likely 1 to 3 months on one account with proper risk management, risking lights, and just being patient, right? This is not a get rich quick, guys, okay? The get rich quick part comes from once you've scaled up and gotten to phase 3, where you have a shit ton of accounts and a shit ton of money in your personal account. So where 1 or 2 are a little bit of risk, you know, proportionally is going to make you a shit ton of money, right? This is how trading works. It's not a get rich quick scheme, right? Anyone who shows you that and tells you that is a complete liar. I'm here to show you the reality of it. All right, man. So now you know how the prop firm account rules work, which prop firms to use, how the actual structure of the prop firm accounts are, how you can scale up by scaling multiple accounts, and yeah, the drawdown, etc. But I'm going to be completely honest with you guys. Okay, here's the reality. Most traders don't pass their first evaluation. That's just the raw truth. They usually don't pass their second or third, right? Like I've blown so many evaluations, guys, in my you know 5 years of trading. It's normal. I've had funded accounts close on me. That's the reality. But I want to show you just the whole ROI comparison by getting into day trading, by using prop firms, and kind of, you know, if you're thinking to yourself that, oh, day trading's a scam, I don't know if I should day trade, I don't know if I should learn this, why I think, you know, it's the best business model to get into because of what I'm about to show you. You can take a look at this graphic over here, but let's say, you know, you bought 5 evaluation accounts, right? 5 eval attempts before you get a funded account, right? That's going to be, you know, $149 each. So, you know, $750. Is that really a lot of money, bro? Like, think about it. Is $750 a lot of money compared to what? A college degree charges you $50,000 to, you know, $200,000. Starting a business is anywhere from $10,000 to $100,000, right? You know, getting your real estate license can be anywhere from $5,000 to $10,000. Going to med school, right, on average is $250K. You're literally paying $750 to get access to a $150,000 trading account and the leverage associated with that, where you keep 100% of the first 10K. If you actually look at the ROI and you do the math on this, and people really fail to realize, if you look at the first year ROI, if you trade with prop firms, you were quite literally looking in at a 2,000% ROI compared to a real estate license, which is a 900% ROI. And then you don't even know. Business has no ROI because it's so variable. You don't even know. And then in college, right, you're basically making, or excuse me, after medical school, and, you know, well, not medical school, but let's say college, right, you're putting in 120K in only to make 55K a year on average, which is a 46% ROI. So clearly the business route is you know, it's unsustainable. You don't even know. The real estate route might be pretty good, but you still got to do all that. It's still 5K. The college route, there's no ROI on this. 46% ROI on college. Look, on a prop firm, if you go the prop firm route, you have a 2,220%, 2,222% ROI. Again, this is the best risk reward ratio of any business or any opportunity that's literally ever existed in society, right? This is the #1 time to get into day trading and learn day trading. But you have to understand something, and this is a big but. This only works if you can actually trade profitably, if you have the right information, if you understand what you're doing and understand that you need to have a strategy, the right information to get you to this point. The evaluation fee is not the hard part, the skill is the hard part, right? The barrier to entry has never been lower, but can you trade is the real question, which is why day trading has such a high failure rate, because people try to do this themselves and have no clue what they're doing. They lose all of their money, they, you know, blow 10 accounts, and then they quit because they just didn't ever have the right information. I'm going to get into more at the end of the video on how I can help you become profitable and achieve your dream of, you know, getting money with prop firms and, you know, learning how to day trade. But I still need to talk about a couple critical things with, you know, the video still, and the, you know, the drawdown dynamics as well as the risk dynamics when trading these accounts. The #1 mistake I see traders make on prop firms is trading big way too early. Okay, guys, this is honestly because of social media and influencers and just the whole narrative of people not having the right information. But the biggest way that you are going to fail in day trading and fail in prop firms is because you are risking way too big. Because you're seeing all these people who are full porting their accounts, risking their whole drawdown, getting lucky, and then that's encouraging you to do the same thing and then conditioning you with bad habits to do the same. And then guess what? You've blown 30, 50, 100 accounts, whatever. Here's the math that most people skip. Since you have $4,500 of drawdown on a top step 150K account, okay, if you're risking, let's say, 500 per trade, obviously that's not at 0.5 or 0.2%, but if you're risking $500 per trade, you can quite literally only lose 9 trades in a row. Like, let that sink in. You can lose 9 trades. If you lose 9 trades in a row, which is very normal, guys, trading discretionarily with the system, a trading strategy, it is very easy to lose 9 trades in a row. You're done. Your account is cooked. You've lost the account. The more you risk, look, if you risk $1,000 per trade, 4 losses, boom, you're out. $750, 6 losses, you're out. However, if you risk $300 to $225 per trade, which is what I do, you are in the sweet spot of letting yourself have room for error. You can lose 15 trades in a row and be fine, right? Until you blow your account. You can lose 20 trades in a row and then you lose your account. But 15 and 20 is so much more breathing room than 4, 6, and 9. And obviously, if you risk less and less, you risk $150 per trade. You have 30 consecutive losses before you blow your account, and then 100 is 45 before you lose your account. Okay, the probability of you blowing your account goes down and down and down when you risk less and less and less. Now, obviously, you're not going to be able to hit home runs, right? Like, you're not making 50K in a day with these risk profiles, but that's where you scale with more accounts. Okay, if you have 20 accounts, let's say with Apex, 10 accounts, whatever, through all these firms, and you're risking $150 to $300 per trade, you quite literally are able to scale up so fast and make so much money, naturally, because you have more capital. The traders who are actually getting to 10K in the most sustainable way possible, I wouldn't necessarily say the fastest, but the most sustainable way, they aren't swinging for home runs because they're risking small and they're letting the math compound. If you try to replicate what these gurus are doing, what these people, these other influencers are doing, you will genuinely blow through 10s of 20s, 30s of accounts and be in the hole of your own money and be in debts if you do it that way. So understand, right? The most popular account size is like a 50K account. You really shouldn't be risking more than like $125 per trade on a 50K account, because yes, you still have 3 or 4% of drawdown. But again, like, let's say you risk $500 on a 50K account, right? Now you have a little bit more drawdown, but that's like, dude, that's not like 9 losses. Well, you don't have, what am I saying? 9, bro. That's what, if you have 2,000 worth of drawdown on a 50K account, which is what you actually do have, you're risking $500 per trade. That's 4 trades before you lose. If you risk imagine that, bro. You see people making 10K a day on their 50K account, right? If you lose 5 trades in a row, and not even in a row, until you've made your buffer, you've lost your account, bro. So see how easy it is to lose 5 trades in a row. And for the people who have traded on prop firms, you've maybe embarked on this journey already. You know how easy it is to lose 5 trades in a row. So you can't do that. But remember, guys, this video is designed to help beginners understand the right the right methodologies to be able to even make $10,000 from trading in the first place in the most realistic and sustainable way possible. Now, this can be a little different. There's things like Kelly criterion, Sharpe ratio, things like that for, trading systems and, designing trading systems. But this is kind of the gist of it. You need enough room to survive drawdowns, and you need enough size to hit your profit target in reasonable amounts of time, which is why this 200 to 375, 400 risk profile is the sweet spot of making that money ASAP or as fast as possible. All right, so what I want to do is kind of want to give you exact targets and how this works, right? Like kind of like the weekly and monthly targets, so you kind of understand how this works, straight from the numbers from this example. Let's say on a 150K account, you're trading NQ and you're risking $200 a trade, going for a 1 to 3. Every time you win, you make $600, and every time you lose $200. At a 50% win rate, you're netting $200 every 2 trades, and if you take 2 trades per day for 5 days, that's $1,000 a week. Even at a 45% win rate with a 3-to-1 RR, you're still making $3,200 a month. So you're hitting your 10K in about 3 months, and this is with the 3-to-1, 1 to 3 proper risk management. With a below average win rate, this is just assuming you have a really shitty win rate. You're not winning a lot. So the math works. Like, you've seen this. We've covered the math. We covered everything so far in this video. Like, you see everything. You've seen everything. The math, how it works. Question is whether you can execute it consistently, as well as do you have a strategy with a real edge that is back tested over 100 trades, 200 trades, 300 trades that you're confident in. Which brings me to the the 10K roadmap, 0 to 10K, step by step, how you do this quite literally in the easiest, most brain rot, brain dead way possible. Number one, what you need to do is you need to learn a strategy, okay? Develop a back-tested edge with a 40% plus win rate and a minimum 3-to-1 RR. Then what you need to do is you need to test this on a simulated funded account. Not even a funded account, but just a simulated account. You know, you can open up one on NinjaTrader, Tradeovate, give them your information. You can easily just make a sim account. TopStep does offer a practice account as well. I think you do have to make an account though, but they do give you a practice account. So you can test your strategies on practice accounts, simulated accounts, right? And then proving it on the sim first is necessary, so you have the confidence that you can do it in a real market or on the real thing. Now, once you have the confidence, then you can go to step 2, which is passing the evaluation. You buy a 150K account. Now, trust me on this, you have to go for the 150K accounts. I know it's a little bit more, but don't go for the 50K accounts. Go for the 150K accounts. Trust me on this. And then you have to hit your 9K profit target while staying within the drawdown, okay? Now, cost-wise, if you spend, you know, you go on 3 evals, that's going to be, you know, $450. If you go, you know, spend, I'm saying, you know, so much, holy fuck. If you spend $150 on one 150K combine, right? 3 attempts, $450. Then once you pass your evaluation, you need to survive your funded account in the early days of building the buffer. You need to trade small until the trailing drawdown locks at break even. Why? Because remember, you have no time limit. I don't think I said that earlier on, but when you're on the funded account, you don't have any rebills. You don't have any time limit of where you're forced to make a certain amount of money by a time or they're going to rebill you. So quite literally, risk between $150 and $400 a trade. You know, obviously it can be even lower. If you really want to be conservative, risk no more than $225 per trade, but that guarantees you with high probability, if you're limiting yourself to 2 trades a day, you're not tilting, you're risking low, you're going to be able to make a shit ton of money in the long term. Your goal is to lock your drawdown without blowing the account. Now, once you do that, once the drawdown is locked and you've made a little bit more above the drawdown and you're confident, you can then increase the risk to a little bit more, maybe 400, 500, 200, 300, whatever that might be. And now every single dollar that you make of profit is basically safe. Now, you can still lose the account, but the whole thing is this drawdown is against you because it's trailing. And then boom, step 5, it's literally that simple of hitting your first payout. You just have to meet the minimum trading days of 5 winning days of 150, all right? And then just withdraw your first 1 to 2K to your bank account, right? If you want to withdraw 2K to your bank, well, you know, you have to make a 4K balance. Or in this case, if you want to make the buffer first, like I told you, you need a 6K balance, and then you can withdraw 2K off one account, and guess what? You've made 2K in payouts now, and you still have your account as well as your buffer made. Multiply that by 5 accounts, boom, that's your first 10K right there. And it's literally that simple, bro. Just keep trading the same system, right? Trade the same thing, same risk, and then you just stack payouts every month, every couple weeks until you hit, you know, 10K. And that's how you compounded your first 10K. It's literally that easy. And, you know, your timeline, right? Your full timeline, I'd say, is going to be anywhere from 2 to 6 weeks for hitting your first payout. And then, you know, usually 4 to 5 months at 2 to 3K a month to get your first 10K. But I'm giving you the realistic blueprint on how to do this. No Fugazi shilling, right? The realist way to do this. So if you spend $300 to $400, $450 in eval fees, and your total return is $10,000, your ROI is quite literally $2,000, guys. And this is why prop firms are so powerful and why this is the future of trading in the wave, because you don't have to go a normal 9-to-5 route, a normal college education route, because the ROI is so huge. But again, the whole bottleneck though is you being able to execute this skill consistently. Can you have the right trading system? Do you have the right information? Do you have the right guidance? And do you have, you know, all the other information, all the nits and bits, tids and bits to understand how to do this? Now, before we head it off, what I want to end off the video with is that I just want to give you my 5 years of experience and tips that I can give you to make you have more success, and what I wish I knew when I got into prop trading, as well as just, you know, my wisdom, and yeah, essentially just the top 7 things that I wish I knew when I was getting into this. This is what kills you on your prop firm journey, all right? These are the 7 biggest mistakes that will kill your prop firm accounts and prevent you from having real long-term success. Number 1 is going to be trading too big before your drawdown locks. This is one of the biggest things, okay? The biggest, most fatal mistakes, okay, guys? You do not want to trade big. Now, I know I covered this already, but this is quite literally the biggest thing, okay? Do not risk heavy, because if you cannot afford to spend money on these challenges, if you can't afford to, you know, buy these challenges sustainably, and you're not okay losing them and you're risking big, it's just going to be a recipe for disaster. All right, man. If you size up before the trailing drawdown becomes static, literally one bad trading day, if you go on tilt, if you know don't execute your system properly, you revenge trade, one bad day will blow your account if you're risking heavy. And that's what happens to 99.9% of people who don't understand this. The second thing is not understanding trailing versus static drawdown. All right, you think you have $4,500 of room, but the floor, your drawdown floor, already moved up because you had made profit. Okay, so you need to really hammer this understanding of trailing versus static drawdown, and the combination of trailing and static on Top Step, you know, overall. Right now, I will say intraday trailing drawdown, I didn't cover it in this video, but it's essentially it trails in real time, not by the end of day. So this trailing, right, happens by the end of the day. It's based off the end of day balance, not your highest watermark intraday unrealized, right? But a firm like Take Profit Trader on the Pro Plus account, which is the funded account, essentially, it's a fancy name for the funded accounts, they have this intraday trailing drawdown for the first 4,500. So just be aware that's the only firm that has that right now. Apex recently changed their structure to where they have end of day, and yeah. But like I said, understanding the drawdown, understanding how it works in relation to your balance is super important, and not understanding it will lead you to blow your account if you don't understand the levels, the floor levels, etc. Honestly, this is should be number one, right? This should be number one. Honestly, it's comparable to number one, really, and this is why it's top 3. But this is revenge trading after a loss. Okay, I'm telling you guys, my biggest thing, even at my level, I'll still deal with this, guys, right? And I've made a shit ton of money. I'm experienced, okay? But I still will deal with periods mentally where I will revenge trade, I will just get pissed off at the market, and I'll just keep taking trade after just not being okay with the loss, okay? Revenge trading after a loss is the biggest, if not most critical recipe for disaster and the most fatal mistake. One loss will turn into 3, and just you're gonna burn through all your drawdown in a single session if you just keep taking trade after trade, and you know you're not having that daily loss. Like, let me give you an example, right? Like, let's say the market is trending down, right? Like, let's say it's destined to trend down, right, for the day. Now, mind you, the market's already going to do what it's going to do, right? In the market's brain, or what's destined to happen, is already going to happen. So if the day is destined to be like a downtrend trading day, and you're like trying to buy at like certain key levels, like maybe you have like a level here, like a level here, right? Like a level here, right? And you're just trying to like buy, like trying to think the market's gonna go up like this or like that. You're trying to catch a falling knife, quite literally what it is. You're just gonna get burnt on a trending day, right? So don't try to do this, right? Especially if this is not, you know, related to your trading model or your trading system. Don't try to catch a falling knife or like a rampant bull, a running bull, all right? Because it will lose and you'll fail most of the time. All right, guys, don't do this. And then by taking that one loss, you condition yourself to revenge trade, take another trade, and then you're just taking random trades because you're down already and you want to make that money back and you're crying now. Okay, so please, for the love of God, don't do that. Number 4 is buying evaluations, buying funded accounts without a proven strategy. Okay, if you cannot make money on a practice account, if you've tried to simulate, these conditions on a practice account, you're not going to be able to make money on a 150K eval. And this is why I say, if you're new to day trading, you can't just jump in without having the right information and the right guidance, the right mentorship, right? A 150K eval, just trying to buy it and, hoping to make money, that's just gambling, bro. Okay, so this will cost you. Okay, and I see so many people on social media just going into debt, blowing their accounts, and just being in a very bad situation because they're doing this without a proven strategy. Number 5 is going to be trading high impact news without a plan. You need to make sure you are not trading a news event. Okay, every day before the session, every single day, I have it pulled up on my computer. I am looking at Metals Mine and Forex Factory. These are the number 2 biggest news sources for seeing what red floater events are there. If Powell is talking, if Trump is talking, if there's anything going on, as well as your number 1 source to see, well, is there anything geopolitically happening in the world, right? If I see so many people, they'll be in a trade and they don't even know news happens, or they forget news is there, and then it's like CPI or something stupid, and they just blow their account because they traded news and they didn't even know. And that's happened to me, I think, only one time in my career because I forgot to set the fucking alarm, or I forgot to look. But you need to know your calendar. Number 6 is going to be ignoring your payout and consistency requirements. Okay, let's say you hit 5K in profit, but you can't withdraw because you made too much money in one day and you don't have minimum, trading days. Now, I will say as well, I see a lot of people, they do make a shit ton of money in one day. They hit that 5K target, but then since they don't have the winning days, they try to flip their days and they end up blowing their account because they just want a quick winning day of $150. So they're risking like $1,000 to make $100, and then they just get unlucky and it just goes completely against them and they just blow their whole account trying to get like a quick negative RR scalp to make those winning days. So, just understand, like, keep trading normally, because if you have a strategy that works, you'll get those winning days naturally and then you can request the payout. And then finally, mistake number 7 is that you are treating trading like gambling instead of a real business opportunity. You are not backtesting constantly. You're not looking at new data. You're not journaling mistakes. You're not introspecting, looking at yourself on a deeper level and seeing, what am I doing wrong? What am I doing right? And then improving on that, right? You're taking random entries, no journal, no plan. And understand, guys, that trading is not gambling. Contrary to popular belief, right? This is a business opportunity with real money on the line and a real skill set if you treat it as such. It is not gambling. It is not going to the casino. Only boomers and old heads and people who don't have the right information and the right knowledge and who don't have experience in the field are going to say it's gambling. But like I said, all these mistakes really just come from the same root cause. You were just trading without a plan. You're trading without an edge, and you need to fix that first, right? The problem is just the vehicle, but you need to actually know how to trade in the first place. So now you understand the vehicle, you know how prop firms work, you know how the money flows, how the trailing drawdown works, how the dynamics work, how the opportunity works, quite literally everything. And the math you need to learn and know to get to your first 10K. The vehicle isn't the problem. The vehicle is incredible, right? You've seen the ROI opportunities by, compared to getting a real estate license, getting a college degree, going to med school, doing whatever, a professional career. For $150, you're getting access to 150K in buying power. Simple. But like I just said, the bottleneck is the skill. Can you trade consistently enough to survive the drawdown rules with a real edge, one that's back tested, one that you can trust with the right information? And that's exactly what I teach in my mentorship. Not just theory, but actual execution framework, the right technical concepts, the right fundamental concepts with the right resources that I've curated over the last 5 years. And I've used all of this to pull in consistent payouts, and I've made multiple 6 figures from prop firms. As you can see, we have a nice little breakdown here, with everything in the program and, quite literally all the information that you're getting. But if you're ready to learn how to day trade, if you're a beginner, you have no clue what you're doing, the link is going to be down in the description for you when you're ready. Either way, I want you to drop a comment. What account size are you going to start with? Based off what I told you, what I think you should start with, what account size are you going to start on your first top step challenge? Let me know. But with that, I hope you enjoyed the video, guys. And again, also drop a comment letting me know what other content you want to see, man. I love making these videos for you. It takes a lot of time and effort, but this is my passion. And yeah, I hope you guys enjoyed, and I'll see you in the next video. Peace out.